on every asset.
So bad. It sucks so bad because it's like I know everybody on that stream would not be looking at the market today,
Oh yeah,
and they're just forced to
yeah. I did
take
go on the five
trades.
second, bro. I went on the 5 second.
It's so bad. Oh god. Yeah, I mean, this is people are trying to short this.
All I know is if they don't beat me,
Sheesh.
I get 5K. Let's go.
I would literally just not
I'm
trade.
not trading that
Yeah,
team. I'm just hoping.
I honestly wouldn't unless someone comes up with something. Because it's like who actually wants to trade this?
No one, bro.
This is brutal. I honestly I feel bad because I'm like nobody wants to do this. Oh man. Let's see what we got. I mean, yeah, this is. We'll go over this towards the end of what Monday's going to look like. They're all slightly doing something different, but this is pretty brutal. Is my mic sounding low for everyone? My settings might have. Let me check. Sounds all right. Yeah, maybe okay. Sometimes the volume on there gets bumped down. But I will talk about last week first. We'll go through each day of the week, what we were seeing. And then once we get through that, we'll talk about how Monday's printing here, what that's going to mean for at least tomorrow. There's not going to be some weekly outlook or an assumption of where the market can go with the context we're given. So it's going to be a day by day thing. But we'll touch on that towards the end. Haven't even looked at the economic calendar yet, so I will check that out as well. But that will be after we get through this week. If any questions come up, then feel free to throw them in the chat. And as we go, we can take it from there. But if we return back to last Monday, where we were looking at the development of Monday's daily candle, we also put out an update for how Monday printed in the market. We had this previous week close pretty much identical on every single pair, so it doesn't really matter where you look. Maybe it's most emphasized on NQ, but we had that previous week close on Friday. We look left from here. This is a relevant swing, that large separation to that next daily low. Price engaged there with a manipulation, so running into it. Really aggressive move back up into the range. That's manipulation at a relevant swing. We assume the reversal, and then we look off the highs. We have targets above, ultimately the all-time highs, but then also letting Monday print, wanting to see that act as the confirmation to see a continuation up into the highs. And what does Monday do? This is its own relevant swing because of the separation to this next high. So what do we see there? Not a manipulation. We see a deep close through that daily relevant high. That's going to pair alongside. It's an added confluence. We don't necessarily need it, but not manipulating that is good for us to know that this low is a manipulation. We're in the continuation up into this high. Failing to manipulate means further continuation, basically, is the framework we're using here. We can see that. ES, YM, all of them getting the closure, but really only needing NQ and ES to get that idea. So we're going to go into Tuesday being one-sided. Now, Monday didn't have to print like that for us to have an opportunity Tuesday. I'll also note that Monday could have traded in some other ways and would still be upside or one-sided bullish because we have this idea already from the previous week. You really could have had Monday range, and then you just look for Tuesday to run out that previous day low into those highs. Or Monday itself could have drawn down, put in a low inside of Monday's candle, and then Tuesday you trade the continuation away from that low. All right, it doesn't really matter. It's just that Monday expands, puts in a low inside that week, and we are now trading the continuation up into those highs, and that's the analysis we put out. Want to see a continuation in respect to 50% of that previous day range using 50%, and we're looking for that bullish daily profile to confirm. The only thing that I mentioned that you'd have to be concerned with, because we want to be aware of the potential on the other side of the market. It's thinking in terms of what could happen. The only way that I would be put off of that bias, or maybe there's a level of concern, is if NQ, because if we compare all of these, NQ is right up on this all-time high. It's very close, so it doesn't have to deviate very far from that daily open to reach into it. All of these others are more separated, so it's less of a concern. But I'm thinking if I open my charts on Tuesday and I see a wick up into that high and Q has taken it out and it's developing bearish off of that, that would be a concern for the long bias, because that is a relevant swing that was engaged, and that turns these into a divergence, not failure swings. So that's the only thing that would put me off, and I want to be aware of that potential scenario. If it's not there, then I'm fully one-sided looking bullish on this. And the development was that case where the highs were not engaged. Previous day high does not matter in this context. It's all about this high here. So we're looking for that bullish daily profile. And looking back, just because of the way that this traded, it'll look a little bit different on here. But initially, we were looking for a London reversal to be established. If we forget about how New York traded, opposing run in the Asia session, London putting in a potential low, expanding off of that in respect to 50% of that previous day range. I wanted to assume a New York continuation to frame that expansion. This is where we get led into the next step of the process, which is we want an initial reversal, we want a continuation signature. And if we go back, do I have all these pairs correct yet? Initially looking at ES as my main pair, we're being led into this 9:30 open. We see on the 15-minute this series of opposing closed candles. We can already say the low of day, while not perfect, we did trade off the low of day, make an expansion off of it, and now we have a potential continuation signature, which is not yet confirmed. So running that short-term low, series of down close candles right at 9:15, 9:30 could see it close above to validate the signature here, and that would be your New York continuation. But we can see here failure to close above on ES, failure to close above on NQ. But on YM, I'm going to look at YM later in this step. So when it comes to 9:30, that's where this can play into it. It was basically trading identical to ES and NQ from the daily, even on an intraday basis. This is nearly identical, which I like to see. But right at that open, we have a slight difference in the strength and weakness, where ES and NQ, they're not invalidating the bullish bias, because some intraday price action, these small moves, is not going to change that, but they're not quite validating the entry signature. We can't take them on here because they're showing a little bit of weakness, whereas YM is providing exactly what I'd want to see. Low of day London, down close candles, going into that open, closed above. That closure is giving me a couple things. One is it's validating the continuation. But the other is if I'm looking on the weaker or weakest pair, the weakest here is going to be NQ. So if you look at that 9:30 candle into that intraday low, we can do it on ES as well. If this is not changing, because I'm very strict on my higher time frame direction, just a little bit of movement's not turning me off of the entire daily idea, but I know the weakest pairs are trading into that intraday low. That to me means that the intraday low, if we were to zoom out, there's nothing past that intraday low that the market needs to run out in this day to reverse back higher. So if the weakest pairs are already manipulating the intraday low, while that stronger pair is validating the signature, one, you're going to get better follow through here, but also if these are starting to reverse, well, then the strongest pair, we would start to see that move in our favor. So it's a couple of reasons why I'd be moving over to YM to take that entry, validating that idea on the closure above, entry here, stop loss on the opposing side of these down close candles using that swing. And we are looking for 2R, but the idea is going to go right back to the daily. So we can think our daily time frame on YM is going to be those all-time highs, because it's in the exact same framework. It's not any different. we're using the same idea. It's just at 9:30 where when I start to pay attention here, this is the strongest pair. So I want to trade that. And that's our final objective. So when I think about all-time highs, 47,323. If we note this out, 47,323. We can set up that position. Not waiting for a limit order. Once I get that close above, stop loss is at this low. It does retest. You would have gotten better risk to reward. Great. But that's not something that you're always going to get. It's not a requirement, nor it's not going to change the probability of this trade working or not. The retest is just not relevant because the risk to reward is already proper here. So I'm taking that entry and I'm going to seek 2R at first. That's just a general baseline that I want to see. But we know that there's still a price objective, something that's logical in the market for this to reach for, especially if we're on the leading pair. We should see it get to that area. It's not an overextended target. It's completely logical to see that move up into that all-time high like we were looking for. And that would be your final objective. So 2R, I'm securing that position because there's always a potential. I don't know for sure if it's going to go to this high. It does, but I'm going to scale, realize a good amount of that trade, more than half at the 2R and beyond. And then once it makes that final push into that actual price objective, less concern with risk to reward. On that runner, I'm going to close out full. That's a relevant swing price objective. So there is nothing past that high that I would say the market has to go into. I have no expectation beyond that. So maybe it goes further. Maybe it doesn't. Like this here, I'm out at the high. Did I know it was going to be the high? Absolutely not. It just happens to be. So I'm getting a great close on that, but this could have continued. It's just that I don't know if it's going to go further. I don't have an expectation for it. So I'm not trying to assume very much. So once that makes that final push, also knowing ES and EQ are pretty much holding lower, that's going to be where I close out that trade and the rest of the day. It fades off a little bit. You can see the difference between the strength and weakness here. I also talked about that lesson that I put in the lessons channel, which is understanding the difference between a really proper development of an expansion day and the ones that are lower likeliness to play out. This is almost a perfect example of that, where we have the development. When we think about a shallow opposing run, that's step number one. I want to see that. The second is when we establish an intraday reversal, that London reversal, expanding off of it. Same with these pairs. London reversal, expanding off of it, and we're already ready for that continuation. We should see the market stay propped up. Expansion days, they don't have time to make those deep runs back. Expansion days are going to be quick. They're going to stay propped up once that intraday reversal is formed. And I want to see that as a proper signature. And we can pair this with the 930 open as well. If I note out the difference here. 930. Hitting the market here. Versus 930. Hitting the market here. What's the difference that we see? The main thing is 930 as the main volatility driver of the day. Just think of logic here. 930 should provide momentum. It should push price in our favor. If that's the main volatility driver of the day, it's emphasized. It's going to be important either way, but 930 is supporting this move here. 930 on ES and NQ is pushing against the direction we're looking for. That means when it comes time to turn back to the upside where we're looking, what is providing that? What is pushing that move? It loses the momentum that we're looking for inside of that daily candle, and sometimes it can expand back, but the likeliness is much less. So this is ideal development of a daily candle. That's where we see that follow through. This is lacking that ideal development. And that's why we start to see that follow through. That's just not as sustained because it's not being supported with those signatures that I like to see. So that's a couple lessons there that kind of tie into each other for a day like this. This is a good day to study because there's a lot of lessons inside of it. But that's really it. If you don't get on side with YM, a day like this becomes unlikely to position on. By the time you get any form of a continuation, it's getting into the PM session. So Good question. Why not any of those continuation signatures? That would come back if you go through the content of what we need for just absolute baseline valid opposing candles. They need to be well defined. So you can look at really any pair. We have these that you're noting out. I believe that's YM. These are lacking structure, wide candle bodies on the opposing candles, providing enough range, because these here, while technically closed through, they're lacking the candle body, but also just the general range for me to say I'd feel comfortable placing my stop loss on the other side of this opposing candle. This here is providing range. It's providing confluence with the open. It's a much more likely entry. And it's just these things that you have to build your eye for, of what is like these here. These are not valid up close candles. They're very small ranged. Same with these here. I would be completely blocking those out. And that's something that you have to build your eye for. But there's definitely extremes to it. I would put this on the extreme of I wouldn't even put much attention on them. But that's the idea. Think about the absolute minimum baseline is just the type of opposing candles that we're looking for. Five-minute continuations after 9:30 on YM. I didn't look at the 5. I don't believe it. It could have provided something, but yeah, like you have that. Technically, that can be valid. I can't say I'd enter like this here. Well, it's not terrible post-open. I like it when it starts to expand. And this could technically be valid. You have a clear opposing candle in that continuation, and if this is your target, you have room for 2R on that. So you could. My focus is like if I have a 15-minute signature, the likeliness of me dropping below to a 5-minute is unlikely, because I already have what I need on a higher time frame alignment. But you could. Yeah, let me kind of pull this up for you, because let me grab this, because it's somewhat of the structure, but opposing candles. So this is in the opposing candles section of the expansion model. This would be kind of like these baseline things that I look for, which I just put in the chat. Probably put it here if people are watching the recording. So you have these undefined opposing candles, and this is super important just because this is, like I said, it's the baseline. Before you even think about confluences, volatility drivers, we just need valid opposing candles to even be considering. And you can't assign a point amount to it just because points change. So it has to be something you visually build your eye for. Would you need the new place is nice. It's great. Been here for almost a month now, but I still have stuff coming in. Like I have a new desk coming in today, so we're still getting settled a little bit. It's all good though. Would you need a CISD to confirm the daily low? And did you use the 15-minute or higher? Yeah, so you can look at the 15-minute on this. It's one of these things that you can kind of just assume the reversal's there, but that would be your technically down close candles, low of day, closed above, expansion off of it, continuation here. So because it's London session, you go 30-minute, 15-minute. I'm not sure what 30-minute looked like. but very similar. It's arguably cleaner. You could do this as well. It's going to give you the same idea for low of day. You could trade the London session. London session entries. This is going to get a little bit, I guess, well, around here, no. So I don't think if these were clear opposing candles, I feel it would be a little bit less likely. It'd have to be a very defined, like I'd have to be seeing this earlier on, really wide range to be positioning in the London session. I don't try to work with small stop losses in London. The idea is that you're positioning for a larger move. So if you're that early in the day. So if it was, even if the candles were defined here, I doubt I would be taking that entry. June 3rd. Yeah, so like in this day, this would be another example. I wouldn't view any of these as valid. We can go to NQ. Be the same idea here. I mean, okay, this is different with NQ. I mean, yeah, technically you have down close candle, close above. This is different. I would say this looks a little bit better. Where's the opening price here? Yeah, I mean, this is better than what we had. You can almost see this is the difference. The London session is, there's some nuance with the London session that you kind of have to think about how volatile it's been trading. This is very weak off the low, in my opinion. This is like a very undefined reversal that I would be a little bit sketched out to take an entry near. This here is a lot more defined. So the London session gets a bit tricky when you're trying to position on that day. Yeah, I want to think I had a low of day stop there. But that's the thing. It's like that reversal looks a lot better in comparison. What was the daily here? Yeah, Monday reversal. Also on this day, this is where the reversal comes in. Like if we're on 15-minute here, I don't want to see this deep run. This technically is creating a failure swing. So waiting longer is we're trying to filter out lows like this. So it's just adding to a reason why I wouldn't be positioning there. Yeah, that's kind of like a positional type entry. Or when I went to the 15, remembered this area here. Clear these off. Nice day there. Did I pyramid on this day? No, I didn't. Surprised. Huh. I guess maybe not. But yeah, decent example. It's not that in itself isn't even a perfect London session, but you kind of see the difference there. Then after Tuesday, this is where we started to get into failure swings. So Wednesday was a filter day for me. Shifts focus right back to ESNQ. So I kind of return here for analysis off the higher time frames. And price was basically just ranged inside of the previous day from the open. So the overnight session going into the open, ranged here from the highs to the lows, pre-open. Still have these failure swings to the all-time highs open. So the only real idea that I would have taken for this day is pretty much like we talked about, would have been manipulation of that low, continuation to the highs. If it breaks down like this is not a trade of interest for me. It's very much one to see these highs taken out. If it just expanded without taking the lows, again, that would have been not a trade for me. Really, the main case would have been manipulation of previous day low to get up into the failure swings above. We had a potential for that. We can go even 5 minute. The open did dip down into it. Decent, looks okay here, but a really wide range, which is not the best way to get into that low because you know it's leaving behind that wide range, but nonetheless, you'd be looking for continuation, which does not happen. Don't get a closure, so no continuation to the upside. Filters out. Once it drops lower, the day's over. I'm no longer interested in this. And even if I was trying to trade the breakout of the low, don't see how that would be possible. The day expands, but it's not one that I really care about. It makes an okay move, I guess, but it's just going to be, what does that mean for the next day? I see no reason to enter really anywhere in this market for me personally. Nothing is even validated if you go mechanical wise. And then anything with these really large swings, even if you were thinking about trading the breakout, your stop is going to be super extended on really any of those moves. What you'd want to see, again, not really the idea, but a breakout's going to be more attempt and then close through instead of a deep swing, these deep moves. So that day is a quick filter, zero interest for the day. Moving on to Thursday. And this is where our understanding of the daily comes right back into play. The highs, nothing really changes from the day before. We still have these highs open on ESNQ. Intra-week failure swings, all-time highs, failure swings. And then off the lows, this low is a relevant swing because I'm going to look at what this reaction was. This is a relevant low because this is a daily low that has this large separation to this next one here. So this becomes a relevant swing. It's also intra-week, which I like to see. But even without that, this is a relevant swing. This is the next one, large separation. We can look at this on its own. What was our reaction there? Manipulation, trading into it, close back into the range. Failure swings to the highs means I'm not trading this bearish. That is completely filtered out. I'm going to look for any level of confirmation to the upside. We can also mark out 50%. And we're looking for that move higher. I know when we looked at the charts, it's very easy to take a look at this and say, this development is bearish, which this is where we need our daily to keep us grounded, because some may see this and be like, I need to be short immediately because this is how the daily is looking. The daily profile is developing, but we have to stay rooted in that higher time frame process. So I'm filtering that out. Doesn't mean it's ideal. So if I'm looking to the upside, I don't want to see this, but it's just going to play into how I approach the day going forward. So we had talked about, because I forgot I was streaming on this day, where we're looking to see this move higher. That's all we're interested in. But this is not ideal development of a daily profile because we are making that opposing run higher, and then now we're expanding back into that low. That means if I'm still one-sided bullish, it's still potential there. I'm just going to be using higher confirmations. We'll be waiting for the open. That's my subconscious offset to something that's not ideal. The daily profile is not perfect, so I'm not going to be aggressive on my entries. I want to be sure this market is reversing first before I even attempt a continuation higher. So I'm going to use some additional filters. That means higher time frame. That means waiting for the open. That means not jumping to a 1 minute chart and trying to position on the first close above a down close candle. Things like that. So we know the intraday low. We're creating a failure swing already, pre-open to it. So we'd want to see that intraday low engaged, especially if we can remain respecting this invalidation. So you have the 9:30 open. We're kind of aligning time and price here. We know we have the intraday low. That should be engaged because it's just a failure swing. We're also lining right up with 9:30 that we'd want to see support that idea. We can keep ES in the no here as well. We can drop down. Eventually price gets into that low. So this is what we're seeing. Low time frame. Into that low. ES. Divergence. 9:30 expanding price higher. So that there is our added level of confluence. This is not the perfect way to reverse. I didn't love how that traded off the low because you technically leave these failure swings on NQ. So we're trying to filter this out. But really, any way you approach this, 30-minute, 15-minute, getting that initial reversal, you're pretty much led into this intraday high because this expansion move is relatively quick, which is fine. There's still room on this day. We know at price we had a 200-point range. Average daily range here was about 400. So we could assume 150 points more on just a general expansion day, which is looking to align. We just need to get a valid signature. So ES and NQ, right, both at their intraday highs. What that means for me is I'd want to see the opposing candles quickly form and then close back above. That would be your failure to manipulate because we're already at that high. And then we see, yes, we can go 15-minute or even 5. 15 minutes is going to be ideal, but doesn't really make a difference because I can assume what the 5-minute already looks like. Okay, this is decent, but then we start to get that really deep run back below. And this becomes a concern for just a few reasons. And this comes back to just what does the market have to do to provide an entry? A couple issues with this. The first is that if we are going to get a close above, it's a very wide stop loss. Much wider than we'd like to see on a day like this because our expectation is only so wide to the upside after making this move. So wide stop loss, but then also it's going to take more time to get that closure above. It's already 10:30, and that is not ideal. We'd like to see opposing candles, like if I'm thinking in an ideal sense, right here, and then we get that closure right above. But we're getting a super deep run, and now we kind of have to range around and then eventually get that closure. So wide stop, slow price action delayed on the closure above. It's not the perfect condition. It's not inherently wrong. I'm going to preface this by saying this is what we're looking for. It's not wrong to take this entry, but you have to be ready to either, maybe you're not going to reach a 2R. Potentially you will. Maybe it does expand, but you have to be prepared for somewhat of a hold on this because your stop is going to be fairly wide. So I know eventually after about 30 minutes, another 30 minutes, we get that closure above. I believe NQ does the same. So again, not wrong to take this entry. You're getting your opposing candle through that intraday high. That's failure to manipulate continuation signature. You can take that as an entry. It's valid, but if we are, looks much better on NQ here. So let's just say we're looking to take this. We'll go on the open of that stop loss 80 points. So remember your 80-point stop loss. You need a 160-point move to reach 2R. Here at 11. And I think eventually, if you're holding out through this, you maybe reach 1.5 on that. What's the max you got on this? Maybe you're scraping out 1.5. That may be worth it for you. By the end of the day, right, you're getting a 1.5R on that. Nothing wrong. Again, the trade logically makes sense. It just depends if you want to put that on or not. Not an ideal development on that continuation to get a nice follow through, but nonetheless, it's what we're looking for. NQ slightly stronger on that close. Could be taken. But that's really the process. Why we're filtering out downside. We want to see that move higher. 930 supports it, and then you go into final step, which is continuation. Anything beyond that is more or less nuanced if you feel that's the trade you want to take. So I feel like everyone kind of followed along with what we were looking for on Thursday. And that was all I got for Thursday. Friday was going to be basically immediately a nothing day for me. We know we want to see the highs reached into. Failure swings all the way to that all-time high, right back to it. This is just good framework for it. But we had CPI at 8:30, so the overnight session ended up making the move, and then CPI itself expands even further. So you basically have that entire daily range captured by the time it's 8:30. You can look, so my first instinct is almost always going to be back into the range, just because again, this comes back to similar to closing out that trade on YM. I don't know if this is going to go higher or not, and to what extent, because we don't have any target above. It's a bit tough to gauge that. Either way, I mean, I don't see how you'd validate any side of the market on this day. Short side is obviously not there. Short side I like better because we can frame it to the daily open, and we actually have a level that we are reversing off of. So that's better to me, but that's doesn't even become an option. The upside doesn't become an option. So this day, by the time 8:30 hits the market, we're getting like right around the open. The day's over. I don't know if people actually end up trading on Friday, but that's like an immediate no-go day for me. Not too exciting for a high impact news day, but sometimes you gotta be boring like that. This opposing candle, I don't know if you were talking about this up close candle. Point of interest. I'd missed that question before I had gone into Thursday and Friday. But even if it was, there's no opposing candles that I was looking for in here. Nothing was really validated for an opposing candle. I mean, technically you maybe could use this as support, but not really necessary. This one here. Yeah, I think you could. There's nothing wrong with that. I think like NQ is a little bit more defined. Trading off that low. The thing with this is the opposing candle can be a little bit of a confluence for you, but it's still going to revolve right back to highs and lows, which is this low here. So you don't need it. The opposing candles come into play mostly on like following days where we don't need to run out highs or lows. But like, for example, if we close above that here, I'd be using the opposing candle for this day. But here we need to run out that low anyways. So yeah, YM was all I got from last week. The rest of it, Wednesday was a quick filter day. Thursday, the logic was there for the continuation, but didn't feel it was the right condition for it. We were looking for the upside there, and then CPI expands the entire daily range on Friday. It's just those days I don't have. I pretty much immediately bail on days like Wednesday and Friday, just because there's nothing for me. I don't know where the market's going. It also doesn't really matter because the framework, step one is not there. I do both. I'm trying to get more into props more recently because we're doing some stuff on that side of things. So it's only beneficial for me to do more of it. But both. There's benefits and drawbacks to both. So the new one, I mean, the thing with my approach is I'm always going to look for less restricting ones. So my funded futures, their expert plan used to be good. Now it's, I think, the pro plan, which is decent. I'm trying to basically steer clear of anything too restricting on consistency rules and anything that's going to cap a payout if you move too wide on a single trade. Just because if I'm trading less, my profits are going to be more concentrated on singular days. So if I'm being forced to close a trade, then I can't do it. And then when it comes to drawdown, I will never trade on an intraday drawdown account, because if I'm holding out for an entire day's range, there's going to be periods of drawback that I may sustain, and I don't want that catching up or being realized on drawdown. That's the other thing. So my funded futures pro account's good. I started to like the my funded next futures rapid accounts just because they're honestly, I think they just dropped a sale today. I feel like those are underrated overall. Apex I don't touch, although it can be good for some people. Tradeify has some okay. I don't feel like they do anything too special, but Take Profit Trader they shifted to an intraday drawdown, I believe, once you're funded, which I don't do intraday drawdown. Yeah, right. Funded Next dropped something really good today. What's the other one that I'm missing? Yeah, I'm trying. Those are probably the top two right now. Funded Next, my funded futures is always going to be a solid choice. Yeah, intraday trailing until the buffer. I've not messed with those accounts, but I do know they have some interesting rules that are good. But yeah, I know it shifts to that. I think that catches some people off guard because they may not see it. It goes from I believe it goes end of day evaluation to intraday trailing, but it's good that it shifts off slightly. My funded futures, yeah. Like I can pull up something. If you go to let's see. Yeah, I mean, that's just. There we go. Blue Guardian, I've never. I think they have futures now. I never traded with them though. So I'm not entirely sure. They may have something decent. I think they're backed by a Forex firm, so maybe makes it a safer choice, but I have no idea. It's kind of like Funded Next futures. I'd feel relatively comfortable there because they're backed by Funded Next, which is just like a huge Forex firm, which is usually a decent sign. Let me see. Did they? So, I mean, that makes it better if they dropped. Where's their? Let me see something. Next. Yeah, it's decent. Should be prolonging your eval with micros. I mean, I would say most evaluations, but I see very few funded accounts that may be worth trading minis, depending on the stager. Like for evaluations, most of them you might as well trade micros. I know some may set a cap if they're doing strict contract, they're not micro scaling. That could slightly be an issue. But I wouldn't even say using micros on an eval. Most of the time, it's not necessary to even use minis for an evaluation. you trade CFD? Do you recommend start futures? I have no experience with the CFD prop firms. I don't know how it is. It could be good things and bad things with it. Honestly, I have no idea. But I mean, futures firms, I think the futures market itself is better because it's just more liquid. There's no slippage. So futures, I'm always going to lean towards that. The firms itself, I don't know what the rules differ. I know some CFDs might let you swing overnight. I don't think that's that big of a deal for most people, but yeah, I mean, everyone's going to have preference. That's why we like to have the different approaches. Like, I don't expect everyone to want to skip an entire trading day. Some people may find that appealing. Some maybe not. The thing is that that's all I know, so that's what you'll see me talk about. The real learning curve is just being comfortable with that. Some people are naturally comfortable doing it. Some people it takes some time to gain the confidence, because there's a level of confidence that comes with not trading too. Like confidence that this is beneficial for me to not be trading right now, and that I know another opportunity is coming. I have another question about the reversal. Sometimes I get a bit confused comparing yours to TT's. During New York Open, could I use a 5-minute CIST on a New York reversal to confirm and then enter on a 5-minute? Yes. So New York session, you can use 5-minute. So 15-minute, 5-minute is going to be your time frame alignment, 8 o'clock and on. I lean, if the 15-minute is there, I have really almost no need to drop to a 5-minute. But like, for example, on, I believe this was Wednesday this year, we're trading previous day low, needs to get run out because these are failure swings. We were bullish into all-time highs like throughout the entire week. I can use a 5-minute here, series of down close candles, close above. That's technically your reversal confirmation because we're after 8 o'clock. And then a new continuation could have also been on a 5. It's just not offered. So yeah, you can go 5-minute, 5-minute. The main difference is that you don't need a higher time frame candle because mine is more of the sequence in the daily candle. So I don't need like this doesn't have to be hourly and another hourly to a lower time frame. It's just I'm already assuming a low of day here. So now I'm already at 5-minute, 5-minute. I will get into a plan after I clear out these questions. I will get into a plan. ES chart, I will get into that as well. Actually, all questions seem to be about a plan, so let me talk about that. You have to set and forget it unless you'll micromanage. Yeah, it's not a bad approach if you're gonna, like, the first part of your trades, just kind of letting it run. And then once, maybe even setting alerts, and then you can say, okay, maybe I'll manage from here. Can't be a bad thing. All right, so we're just going. This is really something. Let me grab the economic calendar. Let me do that as step 1 here. Okay, we got Wednesday. I'll throw this on the chart. Seems we will have this. Don't think there's going to be a delay. FOMC statement press conference on Wednesday. So that is high impact. Wednesday 2:30 is going to be high impact news. That could be a driver to start seeing price move in a certain direction, because sometimes when we're up in this open space, a driver of time may be more important than price because we don't have price levels itself. Just be aware of that. Wednesday, usually that means Wednesday is going to be a day where I'll take a peek at 230, but it's beneficial to most in a day like that. The volatility is super high most of the time. Sometimes there'll be a setup. Usually it's going to be more risky. So Wednesday can kind of be a day to play cautious. I don't usually trade before 2:30 on those days. So nonetheless, we're just seeing price just expand. I mean, this is pretty gross, if I'm being completely honest. What my approach is, and this is going to be me recycling the same approach because it doesn't change, is we are in open space. So whatever happened here, this no longer matters. This is not even real anymore at the moment. So this is what we have, right? This is the framework we're provided. I'm not pulling a narrative. I'm not saying there's a gap here. I'm not saying Trump and China said this, so it has to go there. We're just looking at price, and this is all we have. So what I'm going to do is, let's say, assuming we close bullish, I think some people might know what I'm about to do. 50% of previous day range. If we're going to close at the extreme of this high, that means the next day is going to open near previous day high. That's our only price reference. I'd mark that out as well. And I would be waiting for the development of the next daily candle into the New York session. Actionable things become overnight, either arranged, and then either London or New York popping up into that high, developing bearish, and we can frame because this is technically a relevant swing. Other is going to be establishing a low, London or New York, and then we can just assume another continuation day because we're respecting the invalidation point, creating a bullish daily profile. If it falls outside really one of those two things, there's not much narrative to pull from. We're trying to basically use the previous daily candle and the development of the next daily profile to get an understanding of what side of the market is seeming to develop. And yeah, this is all-time highs. This is not that fun. It's not the highest quality you're going to get in the market. But yeah, you kind of have to just roll with it, and that's going to be literally just this candle here. And we need more information. When you're at all-time highs, you don't have much to reference off of. So the more information we get going deeper into New York session tomorrow, we get another daily candle, see how it trades around these two levels, and it's really all you're going to get. YM is showing some weakness, but ES is still propped at its high. So there's no news tomorrow. It's going to be 9:30. But like when I see this, so based on the weekly chart, will we have an expansion week? I don't know. So I don't use the weekly chart. I basically go day by day. The development could eventually show that, but I don't look at this and say we need to now expand from here. It's just reacting off of price levels because that's really all we're given. You're looking across other markets. Yeah, we can take a look. I know gold hit its range low. I would really like this. This is Monday. I mean, if we manipulate this low, that would be this would be literally a brainless long into the high. So this is going to be, it's a little late, so I don't know how much energy gold has left in it. But if you want to, like this here would be, like I wouldn't even really think of any other side of the market. I would be looking to move up into those highs. So if that was confirmed, again, I don't know how this daily candle will close. It's getting a bit late. I think gold is, I think it's a bit slower into the close, but I guess it has some potential to move. If you're going to close back up into that range, even if it doesn't get that, the daily candle wicks, you could still seek that continuation the following day. So that would be valid. Breakdown of the range, it has potential, but you'd have to, I'd like to see the daily close here. If it were to get back up in that range, you could be using the wick, and I would say that's a very valid idea to seek a move back up. A breakdown of the range, technically, mechanically could be valid, but it's not quite there yet. Could gold go lower? Yes, you'd be kind of looking at. I don't think this is gonna be a 1258 like this here. I'm always gonna prefer the manipulation. I'd like to see that. Like if this made a deep run, maybe a little bit wider on the opposing candles, close back below. You could use that as a framework. Technically, that's a breakout of this low, and the following day you could seek your continuation, especially if the daily candle closes deep down into the range. So you're working at a relevant level. So there is actionable things you can find here. So gold looks decent, but that's how I'd look at it. Yeah, fair question on this low. Technically, this here, I'd be fine if that low holds. It's not too far out, so could use this. This is where it's just not ever going to be in a piece of content, but it just, when it's range like this, I'd probably just really only care about this range. This is kind of just like a expansion and deep move back into it. I'm not too attentive on this low, to be completely honest. But if we, held this here, closed back up into the range, I would be comfortable just treating this relevant high and low, trading higher. If this is like and I don't even know, for whatever reason, this is just from my eye over time, I guess. It would be like that big move up and down. If this didn't make that large move and this was positioned right on that low, like we're gonna do some drawings here just to give you an idea. Like if this was right up on that low, it was kind of part of that consolidation, it was right here, yeah, I'd call it a failure swing. But after that really extended move, it's like I don't, for whatever reason, I don't count it as much. I care more about this recent price action. In oil, I don't know where oil's at. I think did it look? Okay. Yeah, this could be valid continuation. You really only will be looking at this low, failing to reverse, running that out Monday. That's technically a relevant swing. So this here could be a decent look. You have the hourly. Depends how deep it goes back into this. You don't have to use that. I'm curious where they align. And this just becomes like, I couldn't justify shorting from this high, at least where it stands, just looking at this. It basically aligns with the wick. So you could use that as a level if you close this candle relatively strong. And I'd be fine with looking for that move. Not that, I mean, maybe this week I will look at it. Usually won't, but if gold got a good closure on the day, I'd maybe look at it tomorrow. Indices, I'll still pay attention to indices, but as we know, this is not as ideal. We don't have as much structure to work with. Oil trades. It's a tough market. I attempted one trade, lost, and then have not traded it again. But I know sometimes there can be decent trades here. It's just not my market. I don't know it very well. What, Ethereum? I can take a look at it if that's Ethereum, but this I usually don't have much of an opinion on. Like this here, I wouldn't. Wouldn't specifically be anything for me. It throws me off when you have a Saturday and Sunday candle. Even if I'm just bare looking at price, not even concerning days of the week, this wouldn't have much for me at the moment. You don't have a reversal established off the highs. The low is not necessarily confirmed. I almost could maybe look at that 4 hour, because you're trying to find an area in the market that you could say, I'm willing to trade away from this lower high. I wouldn't see that yet on Ethereum, at least on a day trading basis. And then anything left here, like this is not providing me any information. This wick? Which wick? This one at the low? It wouldn't even really be relevant at this point. So this is kind of further back. That deep retracement, once price starts that continuation but then makes that deep move back, it just kind of resets my perspective entirely. I almost see it like you have that high. Anything over here, like this is not, these to me are just failure swings. It's not really giving me any information. Yeah, after that wick, yeah, because it makes that impulsive move, then drops deep back down. Now you're almost in that range. He loves oil. Yeah, so tomorrow has to play out because of that. That's do you trade invalidations to what you expect going into the day? That depends. Invalidations are nothing special. So unless you're getting really fancy with it, it's basically just saying I was going into the day expecting one thing that is no longer in question. I can't trade that direction anymore. You basically just reset to step one. Let's say I was bullish going to the day. Okay, that's invalidated. Let me start back. Can I frame something from top to bottom bearish? You're trading an invalidation, but the steps don't really change. So if it aligns and I can trade the other side of the market, then yeah, why not? Best hours to trade gold. It will be, I can just show you. It's going to be like 8 to 10, somewhat 11. We'll go, do I have it on here? Yeah. 8, 9, 10, kind of 11, but that's your main volatility hours. This is kind of like general across almost all markets. They're just going to be, some will just get higher pops, and like Euro will get a higher pop in the London session. But they're all going to be relatively New York focused, especially indices. A little bit of PM session, but I feel like oil is very similar. Yeah. You can use the 5-minute on gold. It's not incorrect. I just find in the times that I look at it, it's less necessary to drop to a 5-minute. 15, because there's just no volatility driver, so 15-minute is usually there. If the market's not moving aggressively fast, especially during the New York session, usually the 15-minute, even the 30-minute may work out. That's where I've seen the best entries on these. 5-minute, just do it with caution if you're going to drop to a 5. It needs to be a quick market, and you need to make sure you're still getting enough range on those signatures. But it's not inherently wrong to the model. It's just a little side note that I'd be considering, that it's usually less necessary. Whereas on indices, it's like there's certain times where if you're on a 15-minute, it's just straight shot candles that you can't do anything with, and you might need to drop to a 5. All right, so I will track. I'll actually keep an eye on gold. Might be decent depending on the daily close. Otherwise, NQ. It's just going to be this process here, which we can then pick up on. I'm not really going to comment much further unless the daily close is a lot different than what we see here. I'll probably wait to comment on it again until New York session tomorrow, and we'll probably just go from there. So that's all I got for this stream. A lot of great questions, so I'll have this uploaded later today for anyone that may want to watch back or join late. So yeah, other than that, have a nice rest of your Monday. We'll keep an eye on this, and gold too. And yeah, thanks for joining in. See you guys later.